This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Today I want to talk about the market, talk a little bit about the market condition, but I want to focus in on a specific trade setup that took place. And in fact, we've seen a few of these now over the course of the last month. I'm just going to show you kind of how and why I would do this type of pattern. It's more of a short-term trade on the S&P and it's counter trend, more like a reversion to the mean, but I do it in a way that's really meant to protect against my longs because I don't want to sell out of all my positions when it looks like the market has some vulnerability. I'd rather stay long my stocks and maybe put on some protection just in case. So this is what this video is about today. Let's go ahead and look at the spider. I'll give you a quick update on where I'm seeing things. I don't have the monthly chart up because I have a 10-minute now because I'm going to show you exactly what I was looking at. But I've got the weekly chart. And one thing, and in fact, I just want to switch this to a monthly real quick. I mean, same thing we've been talking about for a while now is the fact that this continues to push higher and get further away from this 18-month line. And it's getting pretty stretched. So we're at an area where we have pullback risk. Pullback risk meaning that the difference between where price is now and where the moving average is, which is down there where it would meet up with it, is pretty far away. So I think you just got to keep that in mind when you have pullback risk. And then we go and we look at the weekly chart. And yes, the trend is positive and continues to make higher highs and higher lows. It continues to bounce off the 18-week line, this magenta colored line. But when we look at what's taking place, momentum isn't really keeping pace. And so when I see monthly chart extended and this time frame not looking all that strong in terms of momentum, I'm then going to go to the daily chart and you can see that we don't really have any great momentum here. Even though we've been making higher highs and higher lows, ADX is still well below 25. So we've got some risk from that standpoint. So when I see that, I'm a little bit more hyperactive on the hourly time frame. I'm going to be looking for signs that the market could be shifting. And so what I want to point out is from this period here, before this crossed down, so right in here is where this crossed down below 25. From that point through this period where you're strong to the upside here, through this whole period here, I'm really not looking to do this type of strategy that I'm going to describe. It's only when I think we're extended and I think we've lost some momentum that I think the market has more pullback risk in it. And I want to sort of do some protecting against my long position. So that's the reasoning behind it. So if we put this together, we see we've got a move up in the weekly chart. We've got low ADX condition where we're making lower highs and lower lows on the ADX. And MACD really isn't keeping pace either. It is below its signal line. It hasn't made a new high in quite a long time. So we've gone through this period. So that's a starting point. Then I mentioned the daily chart making higher highs and higher lows, but no real momentum confirmation there. So let's zero in on the hourly chart because there's a few things I want to talk about. And in fact, the last time I brought this up was here. So here's a pattern where we broke the trend line, rallied up, had our pinch play as the MACD was crossing down through the zero line. We had red DI cross up over green and then hold on a pullback. I mean, this was a really good setup and it led to a trading move to the downside. Now, here's where we just don't know. I mean, is it going to be the start of something significant or is it just going to be one leg down and then we turn around? You know, you never know. So I like to do this. And again, I can protect against longs without taking a whole lot of risk. And then if the market turns around, it's kind of a no harm, no foul type of a thing because I'm only putting it on for insurance purposes. And then if you notice what happened, so let's just draw this in. Let's just show how I would look at this. So we've got trend line here. It's broken, then it goes and kind of goes to another new high. So I might shift this trend line, but it doesn't really matter because I'm kind of drawing in a horizontal line here. Hold on a sec. So I'm going to put this, oops, hold on. Putting my horizontal line going sideways here. So if we break that line, that's sort of the 3 in the change in trend. And so you could have looked at this play right here where it came down through. We had DI moving up and holding. That's not a bad signal right there. Notice how this rallied up, formed a little bit of a pinch play right there. I mean, that's a pretty good setup. But the one that I thought looked really attractive was this one here. So we had this move now. We had a little bit of follow through and a rally back. And then look at this king queen develop with a pinch play and look at the ADX. So as this was in this position and starting to turn down here, starting to watch this. And what I did was I basically went down to the 10-minute chart at this point. So now I'm going to just circle this here. So if you look at where this was, now I'm watching this and I'm seeing this come up and then give it all back. And the red arrow I have drawn here shows where I actually put the puts on. So this was the type of pattern where I'm looking at the weekly. I'm looking at the monthly to start, seeing them extended. I'm looking at the weekly, seeing I don't have good momentum. I'm looking at the daily. It's confirming the same momentum as the weekly, not all that good. Then I go down to the hourly chart. And I'm looking for signs that the momentum could be kicking into the downside. And then from that standpoint, I'm doing the exact same thing I do on every 2 time frame. I've got a rally up to a declining 18. I go down to the lower time frame. I look for the opposing trend. Now, the way this developed, you could have looked at it like here's the trend line break, and then it rallied back up underneath the trend line. So that was pretty much where I did it. When I do the puts, I don't wait for confirmation on the way back down. I like to do it actually as the market's kind of rallying up when I put puts on. And again, when I do the puts, I am doing them for about 5. Actually, we did like 8 days out, and we're looking for just a trading move to the downside because I'm just looking to protect the move from here. In fact, on here, from here down to say something like that. Because if it goes down worse than that, I'm going to start getting stopped out in all my individual stock holdings. So I don't really need to have puts on in place after this. I just want it for the drop down pretty much to the 18-week, maybe a little bit below. So if that's the case, then these puts really help on a single move like this. Now we're coming down to this area. And so, Friday morning, let's see how this handles today. If it can hold here, I mean, this was the target for the trading move. So if I'm going to do this as a trade, I'd get in where I got in, and then I'm going to play it for a trade down to here because that was the 18-day. And it was also this previous price support. So that's a pretty good trade. I mean, I put it on here, and within a couple hours, it's basically going down and hitting the target. But when I'm doing it to protect my holdings, I don't do it that way. I'm more or less looking at, I'm trying to protect against a bigger drop, potentially down to this support area here. And if that's the case, I'm gonna go ahead and hold these and see if we get any follow through. It's just an insurance policy against a big drop right now. We're starting into September. We've been drifting up through the summer, and now I think we're starting to get a bigger audience back. And so I just think it makes sense to potentially have this on. It's just I thought it was good to just give you some enlightenment in terms of the way I'm looking at things. And so if this were to turn back up and rally again, and then 2 weeks down the road, the same pattern would develop, and we still don't have any good momentum on the weekly chart, yeah, I'm going to do it again. And I'll just keep putting on these in terms of risking, but I don't want to sell out of my longs. I want to stay long my individual holdings until they break down. If they break down on their own, then I'll get out. But I don't want to sell them because I think the market could go down. So I just think this is a much better strategy for you if you're interested in holding your longs and maybe just having, only when the market's in this position do you put these on. But it's the type of thing where you can put some cheap puts out. I think we did the 4 let's see, what number did we do? 434, 435 puts. So pretty far out of the money, not that much time. And, you know, if we get a pop, they will explode. They will absolutely explode, and they'll protect all the decline in my individual long. So anyway, that's the update for the week. Let me know if you have any questions or comments. We'll see you next time.